Status review. Choosing the right business structure is a critical decision that directly impacts your tax position, personal liability, administrative obligations, credibility, and long-term growth potential. Our business status review provides a clear, tailored recommendation on whether you should operate as a sole trader, partnership, or UK limited company. Rather than relying on generic guidance, we assess your actual figures, commercial risk, and future plans to determine the most appropriate structure. What the review covers: we carry out a structured comparison of the three main business models: sole trader, partnership, UK limited company. You will receive a concise written recommendation explaining which structure best suits your circumstances, together with the reasons behind it and when a change might become advantageous. Tax efficiency analysis. We evaluate the overall tax position under each structure, including how profits are extracted, whether profits should be retained, and the impact on your personal tax liabilities. Risk and liability assessment. We review your exposure to commercial and legal risks, including contractual obligations, customer claims, borrowing arrangements, leases, and personal guarantees. This ensures your structure reflects your level of risk. Administration and compliance. We compare the practical requirements of each option, including bookkeeping, tax filings, payroll obligations, company's house reporting, and the overall administrative burden. Growth and long-term planning. We consider how your structure supports future plans, including bringing in partners, restructuring ownership, succession planning, and eventual exit. Commercial credibility. Operating through a limited company can enhance credibility with customers, suppliers, and lenders. Where relevant, this is factored into our recommendation. Who this is for. This review is particularly valuable for startups choosing a structure from the outset, established businesses reviewing tax efficiency, sole traders approaching or exceeding the £90,000 VAT threshold, partnerships seeking clarity on roles, profit sharing, and structure, consultants and service businesses balancing tax efficiency with risk. Our process. Step 1. Discovery. We assess your turnover, profitability, drawings, future plans, and risk exposure. Step 2. Comparative modelling. We model how each structure would operate in practice, including tax and administrative implications. Step 3. Recommendation and action plan. You receive a clear recommendation supported by a practical implementation plan, including timing, costs, and expected benefits. Key factors considered: profit levels and extraction strategy, exposure to risk, need for multiple owners, growth ambitions, borrowing and investment needs, administrative capacity. Typical outcomes. A sole trader structure may remain suitable where profits are modest, risks are low, and simplicity is preferred. A partnership can work well where multiple individuals share ownership and responsibility under a clear agreement. A limited company is often more appropriate where profits are higher, risks are greater, profits need to be retained, or scalability is a priority. Next step. If you want a clear, evidence-based view on whether your current structure is still appropriate, our business status review will provide a definitive recommendation and a practical roadmap for moving forward.